the stock market trades like crypto now.
That's right. More than the altcoins. You don't even want to be in altcoins. You want to be in some of these things, especially have options.
Yeah, it's moving. No question about it.
Tesla up 18% week over week. Palantir up 20% week over week. Robinhood up 20% week over week. I mean, it's just a rally in all these different assets, and you can't say they're all the same trade. Well, they're all the same liquidity trade. And once that volatility came out, we got out of the window of weakness from in March. We got past the thing in April, and I think you even said April was the month you were looking for to see if there was going to be any significant drop. And if April passed, yeah, it was 2 shows ago you said this. If April passed and that wasn't the case, you would expect a rally from there. And that's exactly what we're seeing. Just amazing how these moves are happening. However, I don't know all the details for Palantir and HIMS and all that. I don't know the nitty-gritty of the microeconomics for that. What I do know is that if we take a look at the Bitcoin liquidation maps, what we're seeing here is the I had shown this previously that there's $4 billion worth or billions of dollars of worth of shorts in the Bitcoin space, in the futures market for Bitcoin, and that stuff got liquidated, but hard. I mean, we're down to 1 billion here for Binance versus 175 million, which might seem like a lot, 10 times more, but it was 40 times more before. So a bunch of the move up that we saw are these liquidations that we were talking about. Again, over here, take a look at BTC on Binance, OKX, and Bybit. We're down to 3 billion, and before we were up higher versus 500 million. So here's the interesting part. Yes, there's still enough tinder inside for the shorts to get liquidated up even higher still. So getting up to 140,000 seems to me like a no-brainer, especially since we have this liquidity push upwards. But if it's not being met with a corresponding increase in the leverage for longs, then we're not getting to 250,000. And if that's the case, if we exhaust the short liquidations, and then there's no more bulls that come in, and that all coincides with the double top in the S&P over here, double top in the S&P. Let's say we get up to 6,000 on the S&P, and the double tops over there. Well, that all confirms a liquidity pull, like there's no more liquidity there, and a liquidity recession on top of the economy contracting. Well, that's not a 2-year period of recession like we had from 2022 to 2024. That's 5-6 years sideways market, even if the Fed cuts to 0. So the thing that bothered me here the most is when I take a look at the levels for Bitcoin. It would have been healthy if Bitcoin retreated down to the different VWAP levels in order to consolidate and build up momentum upwards. It didn't do any of that. All these moves up are just liquidations of shorts. It has not reconfirmed, which a lesson I learned from Mike a year ago. Confirmation. We didn't get any of that, which means this to me is one of the most unhealthy signs for the move up. This wasn't even like our move up that we had the last time Bitcoin did its run up, because it did actually reconfirm all these different levels, but it's not doing it this time. So this is air pocket. It gets up to, I think we can get up easily to 101,000 on Bitcoin once the shorts are liquidated. We get a little bit of move up with the option space and some of the leverage that gets us up to 144,000 because it's still liquidating the system, and then that's it. Bob's your uncle. Mid-July, we're done. We're headed lower, and then I'm going to be shorting all the way down, because if we take a look at what Ken Carson was saying over here, one of his recent interviews on Real Vision, he was saying that the current rally should peak at about 5,700 to 6,000 before a major decline on the SPY, and then he's expecting 4,800 by October, and basically 3,900, 3,300 by February 2026.
So short-term rallies followed by a pretty sharp reversal to the downside.
That's right. And one of the signs that you're in a bear market is that the rallies are violent. 20% rallies in bounces in a bear market happen all the time. That's how people get wrecked all the way down.
Sure.
Even though they're right directionally, they can't position it properly. Whereas you don't get that on the move up. You get 2 to 5% days, 2 to 5% days, 2 to 5% days. So the bullishness that we're seeing in these assets right now, which is this relief rally because of like the window of weakness, still are going to face the headwinds of the tariffs, still are going to face the headwinds of the liquidity.